traders? I want to do a quick technical analysis on Google. And I'm just looking at the price action right here. Tech has been more bullish due to the fact that people are looking at tech as if it's a safe haven. And so I do think that we have upside right there. There is a sector rotation going on though, where people are moving into the financials and out of tech. But tech still isn't that weak. I think that tech will rally, just not as much. But Google right here, and if you haven't already, go ahead look at my broad market technical analysis. It was released just a couple of minutes ago, actually, right before recording this video. But for Google right here, this big gap right here, I would look for a gap fill straight to the upside right here, and then afterwards we're going to check and see whether it hits this resistance and comes back down, or if it has a pullback and then it continues higher. I think having a pullback continuing higher is a more likely scenario. But just keep in mind that we have that gap right there, and that's what I'm looking at. After it fills the gap, then from there we'll determine what to do next. So the trade structure for right now that I have going on Google, very simple. Google for 1480 strike call June 12, 2020. Expiration for $10.40 per share, so $1,040 altogether. The reason we're looking at that is because we want to see after it hits this resistance, after it fills the gap, does it continue higher? If it doesn't, we will sell a call against it, and then we will immediately go and turn it into a butterfly spread. So calendarize butterfly spread. Sell a call against it, and then sell a credit spread against it. For no extra risk, by the way. If it continues higher, though, then I like this trade structure. After all-time highs, though, it's probably going to face some resistance, and people will continue pulling out of the tech sector as it gets more expensive, and as they stop seeing it as a safe haven and start putting it into financials and other areas of the market that have not gotten up as much. But after the all-time highs, if it still continues going up, we'll just simply turn it into a calendar and diagonal spread, or into a diagonal spread, and we'll continue higher and higher and higher on this. Remember, these just expire in 2 weeks. It's a quick trade. Just looking for a quick gap fill right now, but we might roll it into another trade going into a week after that. But yeah, that's the trade that I'm looking at right now. Just looking for a quick gap fill right there. I think that we're going to fill the gap. And this trade only costs less than 1% of the stock price to put on. So I don't see a reason why speculating with this trade would be bad, because if you just risk 1% of your portfolio, buy the call, and afterwards, after it fills a gap, we'll determine what to do next. But it costs less than 1% of the stock price. You can risk less than 1% of your portfolio in that trade right there. And it doesn't matter if you're looking at GOOG or GOOGL. They're all really just the same thing. But right here also, you need a gap fill. But right there, yeah, keep in mind, Google 480 strike call, June 12, 2020, for 1040. And after it fills the gap, then we will determine whether we want to turn it into a calendarized butterfly, or whether we want it, or whether we think it will continue higher, and we'll turn it into a diagonal spread then. And that, if you guys have any questions, go ahead and ask me in the comment section. I'm also on StockTwist, so you guys can ask me over there. And happy trading.